one of the things I want you to understand is that you're going to learn in my ebook course, Learn Forex Trading in 30 Days, you're going to learn how to reduce and minimize the stress and the fear of trading. You're going to know which indicators to use at the right time that will allow you to take a trade so that you can sit during the trade comfortably. You're not sweating, you're not worried, you're not panicked. You have confidence in the trade. It works. It's a pattern that repeats over and over regardless of what the market environment's like. These are based on solid market principles. When you're in a trade that you have solid confirmation, you've followed all of the rules, you're not breaking any of the rules, you're not chasing the trade. When you have followed all of the rules according to a particular trade opportunity, you are then, while you're in the trade, you're looking at what is actually happening rather than being in a panicked state of mind where you're looking at, or you're hoping, trying to look for things that you want to have happen, or distorting or ignoring real information. So I'm going to help you eliminate those psychological issues and that fear of trading. You're also going to learn that in my ebook course, Learn Forex Trading in 30 Days. Now, I also want to show you how this same technique, this same breakout strategy set up on the pound yen. And I think in yesterday's video, I might have mentioned, if I didn't, I'm sorry I didn't, but when we take this breakout technique, this strategy on the pound yen, we often will earn anywhere from 150 to 250 pips. So let me show you the pound yen. Okay, so now we're looking at the pound yen. This is the GBP/JPY, and we're looking at a 1 hour chart. We've got to use this breakout strategy, not the HL30. We're using the breakout strategy. The HL30 works on the pound yen and the euro yen as well, but right now I'm going to show you the breakout technique. This is the same technique that you're going to learn in my ebook course, Learn Forex Trading in 30 Days. So here is our drop. Here's our support level. Here's a previous support level. You'll notice that this support level is sort of hanging right around there, and no candles close below that support level. So that's really the first thing that we're noticing right here, is this support level. And then we look for a high, or an overnight trading consolidation range, which is right here. We've got this low and this high right there. That's our high. So I'm going to put a resistance level right there to mark that off. There's our resistance level. No candles close below that support level. So that's the first thing I really look at. And then of course I'm looking for indicator divergence, things like that. I'll teach you how to do that and which indicators I use. So here's the breakout candle on the pound yen. All right. Here is the signal candle right here. Now we need the 3 pip entry. Keep in mind that all of my techniques are at least 1-for-1 reward to risk ratio. In a lot of cases, they will turn out to be a 2-for-1 reward to risk ratio. This entry, that high of that signal candle, is 127.68. We're going to give this an entry of 1.2770 for this example. We need to wait until price takes out the signal candle high. Now, we're going to target and start off with at least a 150, but we can usually get about 250 pips out of the trade. The first thing we need to do is figure out where resistance is. If we're trading back up, we need to see where the high is on this 1 hour chart. Remember, this is relative to this time frame. First thing we need to do is make sure that if we're going to target 250 points, that it's not going to run into resistance. Otherwise, we're just going to target 150 points. You see what I'm saying? So we've got a high here of 130. Our entry is 127.70, so we've got plenty of room. We're going to target, since this is not 350 pips away, about 200 points, 150 to 200 points. 129.70 would be our final target. That would be about 200 pips minus the spread. So let's follow along what happened. Now, we need to use a 150 pip stop. We get into the trade. On the very next candle, it pulls back a little bit and then starts to pick up momentum. This is a 1 hour chart. So we're going to play this out and you'll see how it starts to move. Our first target with an entry of 127.70 would be about 129, 129.10, 129.20. This candle goes as high as right there on that spike high. It goes as high as 129.5. The next candle here, next few candles, goes as high as 129.17. That would be about 130 pips approximately from the entry. Now, if you want to continue to hold, remember, here's resistance. We've got to make sure that the final target is going to be closed out before it hits resistance. So the final target was an entry, because our entry was 127.70, our final target would be about 129.70. If this distance, this resistance level was much further, maybe another 100 pips, then I would be looking for about 250 points. So about 129.70 would be 200 pips. We'll watch and notice this pullback here. This pullback goes as low as 128.35. So you're still in profitability with an entry of 127.70. You'll notice that's our entry here. This is our signal candle, I'm sorry. But this is the pullback. And then it pulls back one more time and takes off again and spikes up to a high of 129.56. Now I said 129.70 would be about 200 points. You'll notice that even after that initial 156, price moves all the way back up to, again, 129.73. So you still hit your profit target of 70. So after the pullback, again, it's deep, but you'll notice that, and this is something else that I said earlier in this video, is when you're in a trade that's correctly identified, correctly confirmed, you followed all the rules, you are then in a different state of mind. You're in a more relaxed state of mind. Your trade is profitable. And of course it sucks to watch price go from a high of 129.56 down to a low of 128.62. 80 points, 90 points. But this is the pound yen. You've got to be aware of what's actually happening, not what you fear might happen. Notice what's really happening. That's the state of mind you need to be in when you're trading. That's when you're really going to be more effective and you're going to maximize the most you could possibly get out of a trade. Is that you're watching what's really happening, not what you hope to have happen. This trade works and it repeats itself over and over again. It paid 200 pips. It went from an entry of 127.70 approximately to 129.70 approximately. 200 pips. We get out before the resistance level. That's the first thing we need to confirm, is where is resistance? Where could it potentially find some resistance? And remember, price doesn't have to hit that resistance level to stall or stop. It could fall just short of it or maybe even go beyond it. Regardless, we're looking at 150 to the first target if resistance was lower, at least. That's the first thing we always know, is we're going to get at least 150 pips on this trade using it on this pair. Or 200 to 250 pips. Resistance wasn't far enough away, so we know we can get 200 pips out of this trade. 200 pips is what it paid. Now I review how to identify and correctly figure out where resistance is on the 1 hour chart, 4 hour chart, daily chart. We talk about support and resistance all the time, and I explain in detail how to identify tops and how to identify the different types of bottom patterns that will safely give you trade confirmation. And I teach you in my ebook course, Learn Forex Trading in 30 Days.